Good morning, everyone. It is Tuesday, June 25th, half an hour before the market's going to open. And we said earlier that this week it's going to be critical to be looking at the QQQ, or more specifically, because QQQ is really being driven by SMH right now, and SMH is being driven by NVIDIA. So we're going to be looking at those very carefully and also the VIX very carefully. Now, when we look at our futures this morning, S&P is mostly flat, but is maybe 10 basis points, up 10 basis points. The NASDAQ is up just at the edge of being non-random at 35 basis points. And then we've got the Dow that is down about 20 basis points. So this is the opposite of what we were looking at yesterday, what we were looking at on Friday and last Thursday. So this is looking like it's more of a resumption of what we have seen for the past several months, where the NASDAQ and actually maybe not several months, but maybe several weeks, the NASDAQ and the Dow have this disparity in the directions that they're moving. And the normal relationship over the last several weeks has been that the NASDAQ is up and the Dow is down. Now, normally there is a separation between them, but they will move in the same direction. So the NASDAQ will be up 70 basis points, and then the Dow will be up 30 basis points or 40 basis points. There is a difference in the number of basis points that they move, but they're usually moving in the same direction. So that was causing some stress in the markets, and it reverted over the last few days. So the question now is, did it revert enough? So when we look at our major indices, we did pull back to some support levels. So I guess I should just say reversion to the mean. We had some reversion to the mean. We had the S&P come back to the EMA 8. The EMA 8 has now flattened instead of having this slope, and it's starting to look sort of like this right here, this day right here. We could continue to go sideways for a while and then go up. We could pull down to that EMA 20 and then go up. So far, because of the pre-market action today and in the futures today, this looks like it could be it. Yesterday, it looked more like that we might come to the EMA 20, although that was far more likely in the QQQ than it was in the SPY. But right now, because of the way that we're looking this morning, this could be a bounce off of the EMA 8, but we want to wait until the end of the day. We want to wait till closing before we make that determination. What is going to most likely drive or tell us whether that's going to happen or is going to be the SMH. SMH pulled back to its EMA 20 already, and so it's going to be critical to see if this holds. So far, pre-market, it is bouncing off of it, but does that continue through the end of the day? And importantly, do we get a confirmation bar? Do we get a green bar and that close is above the previous open or at previous high? So if we don't, then it looks more like chopping sideways, unless of course we've broken down. A lot of that is going to be determined by NVIDIA. NVIDIA bouncing off of this level back above its EMA 20, at least in the pre-market. But we'll see, because it did break that EMA 20, although it didn't close at a significant level below the EMA 20. We are below it, or we did close below it. We're now above it, so we'll want to see how well NVIDIA performs. How well do we get defended? Now, what's interesting about NVIDIA is that over the last 3 sessions, basically perfectly times with the open right here, there was about 10 million in puts bought by a single institution. And then it happened again on this day. And then we came down. So from the top, we went from about 140 all the way until yesterday's close was about 118. That's a 20-point move. So let's say 20 on 140. Okay, 14% in 2 days. But remember, these were options. They weren't the underlying. So we're going to multiply this by anywhere, depending on the option that they choose. They're fairly aggressive at the money. So I'm going to just be conservative and say they made 6 times this, not 10 times it. Okay. So if I multiply this by 6, okay, now multiply that by 10 million. Of course, that's only the first day. Okay. So that first day they already made, from the first trade, they already made 8.5 million. And then from this second trade, let's say roughly half of that, a little less than half of that, maybe. So another 4 million on top of that. So in the last couple of days, they made 12.5 million. I wouldn't be surprised. I'd have to dig into the option history, but I wouldn't be surprised if they already closed it by the end of the market yesterday, which could be why it can be recovered right here. Or they'll be closing it probably today if they didn't close it yesterday morning. And so that is a lot of downward pressure erased from NVIDIA. So could it bounce from here and move higher? Yeah. So minus that big downward bet by that institution, now NVIDIA doesn't have that pressure pushing down on it. So there's a pretty good chance that we do get a bounce off of NVIDIA, which would raise SMH, which would in turn raise QQQ. QQQ meaning that it never got to this EMA 20 level. This horizontal is going to be pretty important today. So even if we see the QQQ move lower today, as long as it holds this horizontal, then it'll probably hold it, because the EMA 20 is not that far away. And given 1 or 2 days, it'll probably catch up to that horizontal. So for now, at least for this morning, it looks like the downside risk is diminished. But of course, the day hasn't started yet. So we can't say that for sure. Right? So we'll watch the VIX very carefully, because that'll give us a clue. We can see that it's already come down from yesterday's level. Well, yesterday's high, I guess. We're about even from yesterday's close. And if we'll just watch and see if that spikes up. If it spikes up, then we're going down. If we come back down, then we're probably going sideways. Okay? Or we could go up as well, but that's a little less likely. Most likely we're going to chop, but we could move sideways as well. What we want to be careful of, though, is that we've got this consumer confidence number coming up, and that doesn't happen until half an hour after the market opens. So we don't want to get too excited about these futures and how they're looking and everything that we just looked at. The pre-market, we're looking like we're bouncing, but within half an hour of the open, so we get our normally open volatility, and then we get that consumer confidence report. And if it comes in weaker than the consensus, so we already know that it's most likely going to come in weaker than the previous report. The consumer sentiment report that we had last week already, or maybe it was 2 weeks ago, already showed us that that was the most likely scenario. But now that we had that information, the analysts are able to adjust their expectations for consumer confidence and adjust it downwards. And as long as they've adjusted it downwards enough, then we shouldn't see a huge negative reaction to consumer confidence. If it comes in significantly lower than the consensus, though, then everything that we just said about the bouncing and all of this, that most likely gets erased. And then we start heading back down. So S&P, maybe not. The QQQ, if we get a poor consumer sentiment report, that's going to reflect or have a big impact on consumer discretionary. And it will have an impact on tech as well, and that's the QQQ. So if that happens, then we're probably coming right down to the EMA 20 within the next couple of days. The Dow Jones is what we want to look at also. You can see that it's pulling back a little bit based on the futures market. And that's okay if it's pulling back or if it just chops sideways, because it's been on such a strong movement upwards over the last week. It's normal for us to pause for 1 or 2 days. Big, huge movement upwards, pause 1, 2, 3, 4. We'll consider this one also 5. And in this case, it broke downwards. But we could pause for a couple of days before either resuming upwards or downwards. There is still a fairly large disparity between the Dow and the QQQ's performance. So at some point, we do need to completely resolve this. So either the Dow Jones is going to continue to move upwards and we get market breadth, and the market looks a lot safer and a lot more healthy than it does right now, or that QQQ comes down to match the Dow Jones, and then again, the market looks a lot more healthy. Now, because of the disparity in the equal weighted averages, RSP, so this has just been chopping sideways. It looks similar to the Dow Jones, but not as healthy as the Dow Jones versus the SPY. So at the same time of that resolution of the Dow and the NASDAQ, we need resolution within the equal weighted and non-equal weighted SPY and the equal weighted and non-equal weighted QQQ. Okay, so QQQ and equal weighted and non-equal weighted are not that bad. This is looking pretty healthy in terms of the equal weighted QQQ. So it's really more in the SPY, and that means we need sector breadth. So instead of just everything being concentrated in the tech sector, or specifically the semiconductor sector, we need to bleed out into the other sectors. And one thing to carefully, so before it gets resolved in the broad market, it needs to get resolved within technology itself, because we have SMH hitting that all-time high, pulling back to the EMA 20. We've got XLK doing very similar, not quite to the EMA 20, but very similar. And then we had XLC that didn't really hit that all-time high at the same time. It actually pulled back from June 12th, right? And here we hit that all-time high on June 20th. So XLC didn't participate in that, but it's still looking strong and healthy. It actually looks sort of like the equal weighted QQQ, right? So again, within the tech sector, if we get resolution, we're not that far apart. We get some resolution that SMH pulls back, maybe to the, or not the SMH, the XLK pulls back to the EMA 20. We get a little bit closer to the picture that we see in the XLC. And now the SMH, the QQQ, and the XLC all look, or XLK and the XLC all look very similar. And then we have resolution within the tech sector, and then we could get resolution into the rest of the sectors. So this one has to happen first. So we'll watch QQQ, XLK, SMH, and XLC, and then the VIX to help us determine whether or not we're getting that resolution in the sector and in the markets. Okay, I think other than that, again, the consumer confidence report, we're going to be very, very careful with that. We're not going to draw any conclusions until after that report. And then certainly for the broader market, we're not going to draw any conclusions about any sort of bounce or recovery in the QQQ and tech and SMH until the end of the day. We really want to see how that picture develops. So today intraday is more of a let's wait and see, unless you need to rebalance your portfolio. I wouldn't really be taking on any new positions, certainly not before 7 o'clock, not before that consumer confidence report. And then, and actually I would wait until we get a clear direction after the consumer confidence report, and then be careful of bull and bear traps after the consumer confidence report. So realistically, maybe not for a couple of hours after the consumer confidence report would I be trying to take on any new positions. All right, so I think that is pretty good. I was waiting to see how CCL earnings did, and that basically erased all the negative sentiment overnight. So they must have reported quite well. And so at least in the discretionary sector, this is good news. This is very well, now it's going way higher. So this is very good news for the discretionary sector. So this is supporting QQQ. So let's see. Yeah, QQQ ticked up a little bit because in conjunction with this CCL. So you can see that it's starting to move a little bit higher. Now, we will get potentially a little bit of resistance at the previous EMA 8 line. And so don't be surprised if we move up and we bounce off of it, and then maybe move in this region until consumer sentiment comes out. We could go all the way up to this second line until consumer confidence comes out. But we'll see. I mean, again, the initial move in that first half hour is not going to be super important. It's going to be where do we move after that consumer confidence report, and do we move in a way that is aggressive, in which case we could be setting up for a bull or bear trap, or is it steady is it steady? And if it is steady, does it come with momentum and volume? That will give us a clue that we're getting directionality back into the markets, which we've been lacking for a while. So it's not obvious in the QQQ because it's been dragged up by the SMH, and same with the SPY, but not nearly as much the SPY. So this is, even though there's a little bit of directionality in here, we can start to draw a box like we did a couple of days ago and say, yeah, well, we're still kind of contained within this box right here. So that is on a more medium term or 1 to 2 to 3 or 4 week basis, that is more like choppy movement. It's not directional movement. Okay, so consumer confidence is going to be very important, and we don't want to make any conclusions, certainly not before a couple of hours after the consumer sentiment. So that's it for this morning. You guys have a beautiful day, and I will see you in the post market.